Good morning. This market is really something. And yesterday's close, the way it's been trading, so kind of in a crazy way, even though I exit out of a position that looked like it would go lower, that space that we were playing off of the bottom there. I thought, you know what, this market is likely to gap above the high of this red bar. But we don't trade on thoughts or what we think might happen. Um, to some extent, yes, we do, but it's based on it, what we see developing. And to think that this gap and crap situation could gap above the high of that red bar, it was a thought. I said, am I willing to risk that this doesn't gap down to come down into the area to test these lows for a buying opportunity? And I said, no, I'm not willing to take that risk or educated guess, so to speak, as to how this market has been trading. So now you can see what prices are trading at 316, 317. They're gapping above the high of the red bar. And kind of strange in that, the way this gapped and crapped yesterday and came down and just, was coma like trading, whipping back and forth, uh, throughout almost the whole day. And now we're opening up here. So, with this type of resting period that occurred, it does have a void below because it's gapping up to this high here. And we'll see, it's coming up a little bit, gapping above the high. So it should be able to gap and go. That doesn't mean it won't pull back a bit into here, but in no way should this be violated today, this consolidation. And if it's really strong, possibly even a correction bar, bullish 180 reversal, something to that effect, should it set up a move toward these moving averages. Now, a pullback into yesterday's high, which you can see is 316, this intraday area, if it does move higher right from the open, pulling back into here, right, what was resistance should become support, basic 101. And this should be a buying opportunity or buying area. So if prices pull back into there and then, you get the turn back up again. So, had it opened lower, well, the door would have been open to dropping because there was nothing underneath. Now that it's opening higher, unless there's going to be a fake out of a fake out and things gap and crap and coming into this red bar. I mean, if it comes down below here, it should keep going. So I don't, that shouldn't happen. Buyers seem to want to get into this market regardless, and so the bias will be that this is going to continue to go higher here as long as prices can stay above this area. Let's look at the spiders before we go there. And so this is like the least desirable. So, it's all about tech catching up. Now, yeah, where is it? 392-ish, and a half, 392, right up into this resistance area. Right. So it's the least attractive opportunity, right, for buying something that's up into resistance. But look, if it can chop sideways, maybe for a day trade, but it over the last several days, it's moved up into this stiff resistance area. It's just not attractive from a day trading or a swing trading point of view. And so the question then becomes, Q is going to go all by itself. Well, they might. Well, we'll get S&Ps here. So S&Ps, you can see, are right up in here, into the congestion area, the pivot high. We don't buy. we don't buy after 4 or 5 days up into an area of resistance. You can for a day trade, but you see this is beginning to roll over a little bit, forming new resistance here, pre-market. Maybe gets above it. It's going to be tricky. I think it's going to be a tricky situation with the NASDAQ appears to be poised to push up into this resistance area. It's right in the area of yesterday's high here. It pulls back a bit, should set up, a new buy, deep retracement. It's got to void below because of the move higher. And now whatever pattern forms here, after the open, the first half hour, it is at 13,000. So it's stalled there, but there's nothing to the left other than that number. It's exceeded this high. So, pullbacks, which could be, intraday, this pulling back, say 100 points, just looking at the chart in this time frame, well, there's nothing wrong with that. We shall see. Always combining pre-market data with when the trading day begins, it can become a bit tricky, especially if this should begin to drop. So let's go back to the Q so I can make clear the point that I'm getting to here, where this is up here, right? And now the art of this, the skill of this is combining this, and that we've got pullbacks into this area, there's gapping up pullbacks into this area being support, get a bottoming tail, a 180 reversal, whatever it forms, that's a buy. And now we're going to have, I could have showed it there, but the pre-market, if this begins to drop, you got this resistance overhead. So anyway, pulling back into that area, combining that, and it gets up here, there's going to be sellers. So I think it's going to be tricky. That's what makes the markets interesting and why we love it. We do this every day. Right? The Russell is right up into resistance. Obviously, that's not attractive, but it could keep going as long as it doesn't violate this intraday support. Well, I showed the Qs, McGraw, to show the day chart and how it was gapping up, and to point out the support, what should be support if it pulls back into here. And so now, you can see this here, as it pulls back, you got to get back through it. So, so as this pulls back, does it stop here? Pulling back into there. So, it pulls back deep. It looks kind of scary in the moment. And so then we're kind of like trading in between this area and that area. Can we get through the pre-market area? Whereas, on the day chart, kind of looks like there's nothing there. And historically, when the 24-hour chart and the day chart are lined up together, they agree, not have support and resistance and opposition of each other, you get a lot smoother type of trading, trending without kind of erratic types of reversals that occur. And we want to look at what happened overnight. It wasn't that late, but let's look at this pattern. Well, you can see it here. Well, got plenty of the pivots, right? So you had this sell set up, and then it starts to roll over again. And then all of a sudden you would think, oh, the Fed lowered interest rates. And what is that? That's like, what time it was there, 10:30ish or so. And it just rips higher, straight up. And then you get the bullish price action at resistance. So the market has been schizo in how it's traded. And of course, this type of price action is schizophrenic. All right. We have looked at the Russell. Bonds are down again here a bit, coming into that support area, maybe a retest of this low. And that might be what gets this market moving higher eventually. If corrective price action, if this starts to lift off of this support, if it breaks down through it, it's hard to imagine that the market is going to warm up to that, since interest rates would then be accelerating higher above the area that shook it up, that got the equity markets pulling back. So for now, we've got the what might be beginnings of a trading range. And I think if the markets didn't like this, well, then they should like interest rates pulling back under this 1.4 area. And oil just moving back and forth up against this resistance area that we've been focused on. It's normal to stall there, of course. Gold trying to turn around, still in a downtrend. These kind of setups, ideally, they come down and make W type of bottoms where we get a retest. And even though it's in a downtrend, that kind of a pattern sets up a nicer type of counter trend rally. And you can see, it's backing off from this resistance area right here. We'll see if that shapes up. Silver still looks a mess. It looked great, then broke down, coming up to resistance. The transports, got the transports in the Dow at new all-time highs. There's the Dow, just this wild price action and new all-time highs. And look at the weekly chart. Can't be betting against that. There's nothing there, even though the price action is just not easy or attractive. Let's see where our internals are at here today. So breadth has got a little bit more left in it here before it gets to a bearish level, and it makes sense, which is that is a plus for tech to play a little bit more catch up before it hits that sell area. Well, this would come into here, but look at where sentiment is. The day-to-day backed off a little over the last couple of days, but if this rolls over, I would love to see this come down here, but we'll see. It's just been a market that's been historically different, right?
But Greg, for that sentiment to get back down there, can you imagine how ugly the charts would look? Because I agree with you, the sentiment is just still all out crazy bullish. I mean,
I don't think it would look that ugly, Dan, because of the depth of this retracement.
Right.
I think we'd wind up seeing a trading range.
I think it would have to make new lows to get sentiment that ugly.
I don't think so. But we shall see. I mean, look at the distance it's traveled. To travel back down there again, another deep retracement, and it hasn't risen much, not hardly at all. So there are skeptics here of this market going higher, which is normal based on this pullback. And now it's come up in here, and I think it was in this week's letter or the prior. I mean, I mentioned the fact that this kind of a pattern. I said the best thing that I think we could hope for here, especially looking at the Qs, was a trading range environment for a while. Now, obviously, the Dow and the transports made new all-time highs. So not in those markets, but there's lots of markets that you look at that the best they're going to do is a trading range. And especially with, semiconductors having gotten weaker and such, I think we're just going to continue to have this type of erratic market environment for a while. So that's it from me. All for you. Yeah, look at SMH. That's terrible. Right? It's gapping up to this high. I mean, that's certainly not a swing trade.
I was thinking it was a put spread over the high.
It
From
may be a turn, McGraw, but it's like, it's like, okay, what kind of turn do we want to have? Do we want a nice flowing kind of a turn? Or do we want to, head into a hairpin turn at 100 miles an hour and bounce off the wall? You know, somebody's getting bruised out there. Take it down.
Hey, Debbie, I just looked at our HRB. Had a beautiful close yesterday. Yeah, we did a little bull call debit spread. But I didn't see earnings yesterday. A beautiful close. Yeah, I'm in that with you. Oh, it was? Okay. Then we just need to trail profits. We're up nicely. All right, all our opens are fine. We have 100% bullish positions. Everything's fine. If you have any questions, just ask me. Otherwise, let's go right to gappers. Siebert here. I have no idea what's up, but nice big gap. And I would love for one of you to say, yeah, this is a new Reddit toy. And the reason I say that is because the chart supports it. It is McGraw. Then this one looks great. I love, getting on the right side of those people if provided the chart supports it. So that looks good. PE, no trade, but it was in the paper of they did that spin-off of the engine company, whatever. Bang, we were watching this on this breakout day. Now it's a buy setup and an uptrend. So let's keep an eye on that. ACB, remember yesterday's MT Live was the turn. I don't know if these are viable turns yet in marijuana, but they're worth watching. EDU got whacked yesterday. I didn't see that, but now it's a gap up with a price void, so it's a possible day trade. Thomas asking about Verizon. Yeah, sloppy. Had the retest. I actually considered this in last weekend's letter, right on this green day right here, because it came in, made the turn. And do you remember when it gapped up? I remember it clear as day. It's because Buffett said he added it, a month or two prior, and the idiots chase it. This was your time to get in right here, right over this red bar, back in the gap fill. I was going to give it as a put spread, but there wasn't enough juice. Honeywell IQ. Honeywell, it's, I'd prefer a 1, 2, 3 because it's a wide range bar at a lot of resistance. IQ trades a little weirdly, but it's in an uptrend. You kind of need a big stop. Like today's Thursday, so like Tuesday's low. McGraw JD, yeah, but it's gapping right to resistance, so there's no pattern. RTX, 7690, maybe 30-minute high. I like the monthly actually. MANT, KBX. MANT, bottoming pattern. I just rather, we have so many other more compelling setups than trying to pick bottoms on junk. KBH. Yeah, let it go sideways more at resistance, but it's strong. Amazon 3100, there's no pattern, maybe 30-minute high day trade, but definitely nothing on the daily there. Um, Tesla, Tesla is a better 15-minute chart, gapping up pre-market going sideways. This very easily could go to 710, 715. So that doing nothing at the open with these big gaps. But that's a watch. IQ, did we look at that one? Yeah, we did. All right, let me continue. Costco bounced yesterday along with Walmart. McGraw, let's keep an eye on this for a put spread. Turn 630, gapping up over here. Kind of, it ripped your pre-market. I don't know the reason, but maybe 30-minute high. AA was one we were watching yesterday. Uptrend, daily, weekly, monthly. Sumo, gapping down, 2344. Looks lower, 30-minute low. I mean, that's an ugly relative weakness overlaid with these broader markets that won't fall. The Calder's nasty gap here into the 200, but no great pattern. Oracle earnings, an ugly gap all the way down here to 68. Let's see, without even looking, what is that going to do to the weekly chart? It's going to make this weekly bar red, real body, deep into this bar with a nasty topping tail. That's what this bar is going to look like at the open. But maybe 30-minute high, we can sell a put spread for one that expires tomorrow. Bumble here had earnings gapping over this red bar, so I gave put spread for next week, 55.45. AMC, this has been a Reddit toy. Maybe 30-minute high, day trade. LC had earnings. There's no pattern to me. Rig, can't tell where you're gapping. Pro. Trades wildly, but it's a little breakout there. Fossil. A gap breakout here, so that's on my list here, bottom right. Fossil looks good. Had earnings, both for put spread and directional. This is light volume. Let me just delete you. It's wrong. Norbert asking about X. I actually just posted X as a put spread. I'll sell the 17s and save. You remember some people ask me, "Hey Dan, when do you decide to sell a month out?" And I say, like everything depends on the patterns and how strong support is. And so I think this is pretty darn significant support down here. So let it bobble around for a month. I don't care. And we'll sell away out of the money put spread. In terms of a new trade, kind of a 1, 2, 3 that triggered yesterday, maybe 30-minute high. This is gapping down with its donkey pattern, 30. Go, gapping up a little bit, but no pattern. XPEL, no pattern. These were earnings, DCO. It's an uptrend. Maybe 30-minute high. Pelletier, trying to bottom. It still needs a little bit more work, but I like the gap up here near yesterday's high, maybe 30-minute high. That would be worth the watch. Chewy here, I posted as a put spread, climactic buy setup. Now because it's gapping over 3 bars, well, 2 bars, but You get the point. It's a bullish gap here. I'm okay with going out to next week. So we'll do the 75.65 for next week. This was an IPO yesterday. And there was chatter on Reddit, Wall Street Boys, that the ARC woman, what's her name, Amy? The chatter is ARC woman's buying it. So, there's so many sheep on that panel. Oh, ARC woman's buying it. I better buy it too. So that's getting a little gap up. Kathy Woods, okay, yeah, not Amy, Kathy. Ron, your drop down, please. Ron's asking about EXPR. Yeah, that was one we were looking at yesterday. I never gave it official, but yeah, it is relative weakness today. Had a questionable close here. JP Morgan. If it can get over yesterday's high, it looks fine. I'm going to go ahead and set an alarm here, 155.50. DSSI. Roll. Oh, this is nice. There's red bar ignored breakout. Ah, that's the nicest thing I've seen so far as a new trade. Roland, email me and I'll send you a screenshot of what it means. But what it means briefly is you let it trade until 10 o'clock a.m. and then it's a penny over the day's high. All right, I can't tell whether this one's gapping, but it looks great. So as a new trade, provided this doesn't gap, let's wait 5 minutes. We wait 5 minutes, and then I like this one. Free alarm from yesterday. All right, this thing did gap up. Oh, that's another shipper. Let's watch this into the gap fill. Snap, I posted.